Well, China today reported that its exports hit a new record in July. I want to bring in Mark Dow now. He's a former economist at the IMF and at the U.S. Treasury for more on what these trade numbers mean, not just for China, but of course the rest of us, or all of us, really. Okay, so these numbers, on the face of them, they look great, but you're saying not so much.
Well, no, if you look below the surface, you see this is much more about softness in domestic demand in China, reducing imports, and then the surplus demand that doesn't get consumed getting pushed out into foreign markets. Increasing exports, lowering imports.
Right, and therefore that's why you had that news, and I don't know, Mark, if you had a chance to look at that this morning, but you had the banking regulators, some news out this morning, that the banking regulators telling these banks, hey, you need to put aside a little bit more money for these loans you've put out. That just all speaks to underlying risks in China, right?
Yeah, I don't think the risks are that grave. The balance sheet of the sovereign are strong. They have the situation more or less under control, but we can expect to see more softness in the coming months. We have to keep in mind that there were massive stimuli last year, both fiscal and monetary, and they're rolling off in the year-on-year numbers. The rest of the world is soft. Europe is about to slow down a little bit more forcefully. The U.S. has been slowing down, and we're just downshifting from the rebound phase of the recovery from 2008. So not tragic, but slower. But
that's going to be lost on D.C. That's going to be totally lost on them, right?
Yeah, I think there's a bit of a lost in translation problem right now, because the Chinese are focusing on their issues and they're missing the extent to which protectionism is growing in the U.S. Because unfortunately, it really doesn't matter what the politics are. If the results aren't there, people get angry, Democrats or Republicans. And if they get angry, they want to be protected. They assume someone's doing something wrong.
Right.
And it's become much more difficult to advocate the kind of free trade policies the Obama administration would like to, places like Korea and Colombia, if people aren't seeing more job creation.
Right. Ultimately, that's what it boils down to. But that complicates this trade number. Then complicates the situation about D.C. wanting a stronger yuan, and then China saying that yes, they do want that, but then they're facing slower growth.
Yeah. Although if you look again below the surface, it's less about the yuan and more about changes in the supply and demand balance within China. And that again might be, as you say, might be lost on politicians in Washington, but that's the real story. So hopefully they'll have bigger fish to fry, and with the elections coming up in November, they won't focus too much on it. But it is a point of tension, even if it's a bit misguided.
Right. Well, China is one of the headaches for those in D.C. But the economy here, I mean, as you mentioned, jobs, that's the big headache for all of us. The Fed meeting today, they've got to be worried about deflation, no?
Yeah, they are to some degree, but we in the markets have a tendency to overstate things. I mean, in the recent days, you've seen editorials from some of the same newspapers and magazines encouraging more easing from the Fed. And these same people 18 months ago were saying, no, what are you doing easing? This quantitative easing is going to create inflation, right, and we're going to look like Zimbabwe or Argentina. So we get a bit hysterical in the markets, too. I think the Fed has a steadier hand than we give them credit for. And over time, they understand that the risks are to the downside, and deflation is much more pernicious than people might appreciate, but it's still not the base case.
It's just interesting. I just remember 6 months ago someone had said to me, completely out of the question, deflation out of the question, and then all of a sudden, it's there all over the press. But anyway, Mark, thanks so much for joining us. Really appreciate it. Mark Dow of Pharo Management.